Today, we're looking at an investment analysis titled Up 330% YTD. Is OKLO the next AI superstock? It's a really bullish take on OKLO being the key energy solution for AI data centers.
And that core idea, long AI means long energy, that's just fundamentally solid. The report nails one of the biggest bottlenecks in tech right now, which gives it immediate weight.
Absolutely. It makes a compelling case right out of the gate. You see the 12-gigawatt contract with Switch, that $25 million prepayment from Equinix. Those are huge signals for a pre-revenue company.
Huge. But we think there are a few places to really tighten the screws and make this analysis bulletproof for, a more sophisticated reader.
So where do we start?
Let's start with the money. That bridge between the cash they have now and the massive scale they're promising.
Yeah, that feels like the biggest leap of faith in the whole report. So our first point is this. While the $1.2 billion cash war chest is highly compelling for a pre-revenue company, the material needs to more robustly connect this current capital position to the massive execution demands implied by the gigawatt-scale contracts.
I see that disconnect so clearly. The analysis, it's correct to highlight that they're pre-revenue but sitting on about $1.2 billion in cash. And it suggests, they have a long runway.
Right.
But let's be realistic here. Deploying even the first part of that Switch deal, we're talking about building novel nuclear power plants. That kind of execution, it demands capital on a scale that $1.2 billion just might not cover in the long run.
It creates this kind of existential question mark, doesn't it? The analysis jumps from a strong balance sheet today, which, to be fair, is a massive advantage for a SPAC, straight to this trillion-dollar addressable market tomorrow.
And it just skips the middle.
It completely skips the middle. It doesn't model the capital structure needed to get from A to B. So the reader is just left thinking, okay, how many reactors can this $1.2 billion actually build? And where's the next check coming from?
And that's the Achilles heel for any company like this, right? Pre-revenue, capital intensive, went public via SPAC. Having $1 billion is fantastic, but the market is, incredibly sensitive to future dilution.
So is it even fair to ask for precise CapEx figures when they haven't even commissioned the first commercial reactor?
I don't think we need precision, but we absolutely need rigor. So the suggestion here is to strengthen that financial section. Give us some context, some high-level projections on the estimated capital expenditure to get even the first few Aurora powerhouses online.
That seems essential. You have to do that to back up the sufficient runway claim and get ahead of those investor concerns about dilution. If you're going to be the backbone for AI, you need an infrastructure-grade plan.
Exactly. A napkin calculation just isn't going to cut it if you're trying to convince serious money.
So for a concrete example, you could introduce a high-level pro forma. Focus on what they're on the hook for right now. Like, what's the estimated total CapEx to get that initial 500 megawatts built for the Equinix prepayment?
Yes, that makes a huge abstract number feel tangible.
And then to really validate that runway claim, you could add a brief sensitivity analysis. Show us the expected annual burn rate once they scale up manufacturing, and this is the crucial part. Model when new financing might be needed to get to that 12-gigawatt commitment.
I like that. It shows foresight. It turns a potential weakness, the need for more cash, into a sign of, strategic planning. The bullish tone stays, but it's grounded in the reality of what it costs to build nuclear reactors.
Which is how you turn a perceived weakness into a strength. And if they need billions more down the road, they can't just rely on the money. They need proof the product is solid.
And that leads right into our second point. The risk of relying too heavily on a famous name.
We're talking about the Altman halo.
Exactly.
Okay, so here's the second topic sentence. To maximize the report's credibility, the material must pivot from relying on the significant Sam Altman factor as validation to providing more detailed, concrete evidence of the Aurora powerhouse's underlying technical feasibility and innovation.
Yeah, the analysis leans really heavily on this Altman halo, his chairmanship, his investment, the speculation about the Stargate power contract. And look, that stuff is great for driving speculative buzz.
Oh, for sure.
But it makes the whole thesis fragile.
Well, yeah. The problem is, if your reader already worships Sam Altman, then the section is kind of redundant, right? But if they're skeptical, the report doesn't have the hard engineering or regulatory detail to actually persuade them on the product itself.
It's backwards. Right now, it feels like the big names and the big contracts are supposed to prove the technology works.
Instead of the technology, proving why they deserve those contracts.
Exactly. We need to flip that equation. So the suggestion is to take that regulatory green shoot section and transform it into a real technical de-risking analysis. It needs to show us what about the Aurora design makes it special. Why can it get through reviews faster?
And I think the material already gives us a great starting point. It mentions the NRC accepted their principal design criteria, the PDC, in just 15 days.
Which is insane. Normally that's 60 days, maybe more.
It's an incredible data point, but it's just a number. It doesn't tell us the why.
So we need to unpack that. Turn that 15-day approval into a technical win. The analysis should highlight the specific features that let the NRC move so fast. Was it the fuel type, the passive safety design, its size, its modularity?
That gives you technical validation that has nothing to do with insider connections. It's the science, not the celebrity.
And building on that, you can reframe the whole direct pipeline idea. Don't just say it's carbon-free. Focus on the tech advantages. Does it have, more efficient waste heat recovery, a smaller footprint? What makes OKLO fundamentally better for a massive AI data center than, say, a traditional power source?
That's the key differentiator. Data centers aren't just power hogs. They're giant heaters. They're in places where land is expensive. If the analysis can show how OKLO's design solves those specific problems,
then you've elevated the entire report.
Exactly. It's no longer a story about star power. It's a story about superior engineering. And that's what builds long-term conviction.
Totally agree.
Okay, let's move to our third and final critique. This one is about the competitive landscape and timeline risk. Here it is. The claim that OKLO provides the only scalable, behind-the-meter solution needs competitive context to fully substantiate its significance and relevance in a rapidly growing AI energy market.
I 100% agree. That claim is just way too broad as it stands. Now, the report highlights the R-Power strategy, installing gas generators now and swapping them for nuclear later.
Which is a clever business move, locking in customers early.
It's very clever. But that swap introduces a lot of risk. The weakness here is twofold. First, the report doesn't really grapple with the risk that other companies, gas turbine guys, battery providers, could lock in those customers permanently before the nuclear reactors are even ready.
The risk of customer stickiness.
High. Very high. And the second part is the competition in the modular reactor space itself. The analysis sort of ignores other SMR developers who are also going after data centers. Is it possible a competitor has a shorter timeline or an equally compelling technology?
That's the blind spot. So the suggestion for improvement is to strengthen that core differentiation. Compare OKLO head-to-head against the closest alternatives. We need to look at the real risks of that gas-to-nuclear swap, and, most importantly, the lifetime cost of energy, the LCOE.
Okay, let's make that concrete. To sharpen the competitive moat, the analysis should add a simple comparison on deployment timelines. How does OKLO's 2026-27 goal for one Aurora powerhouse stack up against the next closest SMR competitor targeting data centers?
That puts their ambition in a realistic context.
And we have to hit the LCOE question head on to really sell that clean, off-grid power idea. Data centers need reliability above all else. So the analysis should give us a high-level comparison of the projected LCOE for OKLO's 24/7 power versus, say, a huge battery system paired with intermittent renewables.
Especially for that 500-megawatt Equinix contract. That's a fundamental comparison that needs to be in there, even if the numbers are just estimates.
Of course. But showing that the LCOE is better, or at least competitive, proves the product is an economic necessity, not just a cool piece of tech. If it's cleaner, more reliable, and cheaper, the bull case is basically airtight.
And just to close the loop on that R-Power risk, the analysis should talk about how the contracts are structured. Do they have incentives or penalties to make sure customers actually make the swap from gas to nuclear?
That makes sense. It shows they've thought through the business friction, not just the engineering. It shows real strategic depth.
So, to recap, the report has this incredibly potent core thesis. Long AI is long energy, and OKLO is the way to play it. It works. We've just got 3 main areas to improve it. First, reinforce the financials. Bridge that gap between the $1.2 billion they have and the gigawatt-scale execution they need. Give us some high-level CapEx, Munkers.
Second, pump up the technical detail to validate the product on its own merit, independent of the Altman halo. Let the rapid NRC review, the engineering, prove why the contracts exist, not the other way around.
And third, sharpen the competitive positioning. Address the deployment timelines and the alternatives. You can't just claim to be the only solution. You have to prove it against other SMRs and against battery plus renewable combos, especially on the lifetime cost of energy.
The opportunity here is massive, and the report captures that excitement really well.